It's an interesting question what the ILO can do in contexts like Greece. The most important thing, of course, is that the ILO has a tradition of understanding long-term solutions that are both economic and social. It's a combination of social justice, social dialogue, but also a strong sense of social consensus is an ideal tool for resolving some of the problems that countries like Greece face in the present period. Of course, the real issue there is establishing the framework domestically that allows those different dimensions of ILO approach, the economy, social justice, social dialogue, to operate effectively in that context. And that's really the big challenge for the ILO in Greece at the moment. The immediacy of the crisis makes its suggestions about how Greece might move forward more difficult to implement than might be the case in other circumstances. The question of whether the ILO is effective or not is a long-term question. It's been one that's been asked about the ILO for many years. Of course, the ILO can only operate through moral suasion. It can't force anybody to do anything. So it must operate on the basis that its ideas are good, that people understand them and see them as sensible. And that's what the ILO did in the 1930s, tremendously successfully. It became the repository of a set of policies that worked. In a sense, it became a vanguard leader in the Keynesian model. Well, the interesting thing about the current period, of course, is the ILO is doing something very similar. It is establishing the employment-led growth model at the heart of the G20, at the heart of the EU, working alongside the OECD and so on, and is making a very powerful statement of the need for an alternative approach to the economy and also an alternative approach to the labour market. And I think that that's something that's really quite important about the long-term impact of the ILO. We don't measure this in 3 or 5 years. This is about the ILO suggesting an alternative that takes, in a sense, a generation to ground itself in a context like Greece. And so that's why you'll see the ILO operating in Greece on a long-term basis, probably somewhat below the radar, trying to get the framework in place that will allow its policy prescriptions to be put in practice effectively.
Okay, I've been asked to say something about the way in which the ILO has influenced thinking about social protection internationally, and to create the idea of a social protection floor which would be introduced to all countries to provide essential guarantees of income in childhood, old age, working life, and access to healthcare. So how did the ILO come to do this? That's the question I've been asked to address. Why was it so successful in driving this policy, not only through the ILO itself, but through the UN, through the G20, and indeed in terms of influencing World Bank policy? So my answer to that is that the ILO's influence was a result of several ways in which it worked. First, there was Joan Sommerveer, the Director General of the ILO, has a lot of charisma and skills in the global political arena, and he used these to construct the Bachelet Report. A colleague of his from Chile, used to be a president of Chile, Bachelet, wrote a report influencing thinking about these ideas. Then, in addition to Sommerveer as DG of the ILO, there was the cabinet advisor to Sommerveer, his right-hand man, if you like, Vinicius Pinheiro, who drove this policy through the G20 committees. He was the ILO Sherpa in the labour and development committees of the ILO, and dedicated work ensured that his form of words, the ILO's form of words, got agreed by the G20 in Paris and then in Mexico. So the G20 endorsed the idea that countries should develop social protection floors. But more than that, the third strand of the work really was that the director of the Social Security Department of the ILO, Michael Chichon, had been campaigning really since 2000 for the idea of a social protection floor. He finally developed in 2005 a coalition of people from the UN agencies, from INGOs and other actors to push this forward. And that too influenced discussions, including discussions in the World Bank about the social protection floor. What I would say is two other things about this. One, that there was a lot of good luck. Sommerveer, as chair of, happy to be chairing one of the key UN committees in 2008, 2009, when the financial crisis happened. So his chairing of the Chief Executive Board was quite important in getting this idea on the global agenda. It was good luck that the French had decided to put social protection on the G20 agenda when they were chairing the G20. So some good luck, but really the ILO's hard work drove this globally. I was then asked to say, well, is the bank who endorsed this policy too, the World Bank with their new social protection and labour agenda, said that they would support countries wanting to introduce social protection floors. Is the bank really on board? Is the World Bank really on board? Because the bank has often been antagonistic to the ILO and vice versa on many social policy questions. In two senses, the bank is on board. They are part now of a new social protection interagency coordination board, which the bank and the ILO jointly chair. This was a consequence of the G20 asking for such a committee to be set up, a consequence of the ILO driving that. So there is now a social protection interagency cooperation board with the bank and the ILO jointly chairing that. So yes, in that sense they're on board. Second sense in which they're on board is that their own strategy. The World Bank strategy on social protection endorses the social protection floor. But in two senses they're not on board either. One is that they have subsequently set up their own programme, a programme which is looking at the assessment of social protection in countries. It's called SPARKS, and they're chairing that. They convened a lot of people behind them on that. So there seems to be still some contestation between the World Bank and ILO on who actually is driving the social protection agenda. And finally, really, the comment is that the second reason why the bank is perhaps not on board is that it still uses a different language. Instead of using the language of universal social protection, of inclusiveness and so on, it insists on using the language of safety nets, which is a kind of leitmotif for residualism, for minimal contributions, for targeting special individuals. So really, although in form and in some ways the bank has shifted its thinking, it perhaps is the least willing of the various global partners to this idea of the social protection floor. I think that's it. Thank you.
So in order to address the question of why we still have austerity policies in Canada today, I think we have to ask two questions. First of all, we have to ask why it was supposedly necessary to adopt austerity in the first place, and then more specifically what austerity today looks like in Canada. In 2006, when the Conservatives first came to power, the federal government had a budget surplus of roughly $8 billion. By 2010-2011, the deficit was $33 billion. So what changed in the interim? In 2007-2008, of course, there was the global financial crisis, the ensuing Great Recession, subsequent stimulus and bailouts of auto sector guarantees provided to banks and financial institutions and so on. So this makes the deficit that we've accumulated, the debt and deficit, cyclical largely, rather than structural perhaps, and the ability then to repay our debt and deficit really has never been in question in Canada, and clearly spending is not wildly out of control. Furthermore, austerity measures are not being imposed through conditionality like they are in countries like Greece. So now, what does austerity look like, given that I would argue it's largely political and to some extent voluntary? It's not government trying to raise revenue through tax increases. By and large, it's spending cuts, changes to programs. There's measures like decreasing the ability or generosity of EI or ability to attain EI, intruding on the process of collective bargaining, imposing wage freezes in the public sector, reducing benefits, and so on. And then in many instances, for certain programs, spending hasn't actually decreased. So we see infrastructure projects which use the public-private partnership model receiving a lot of funding. Public sector institutions which support P3s are also receiving a lot of funding, or at least guarantees for significant funding should they take up those funds. So I think then to answer why we still have austerity, we have to eliminate the issue that it's really out of control spending. We have to eliminate the issue of wage pressure from the public sector, pensions, benefits, and so on. What it really is a form of state restructuring and a continuation of older neoliberal policies, which essentially shift burdens and responsibilities in society. They make the state less responsive to labor or popular pressure. They encourage privatization and profitability through contracts within the public sector, through public-private partnerships and contracting out. And they shift risk and burden. So austerity measures today, simply put, aren't aimed at increasing growth and social well-being, but instead at pursuing a particular type of agenda. Okay, addressing the question of, given the preponderance of evidence that austerity doesn't work, why is it still attractive to decision makers? I would say that first off, the desire to pursue austerity isn't an evidence-based endeavor, largely. I'm getting this through the great book recently published by Mark Blyth in 2013 on austerity, where he traces it as a moral or sort of philosophical position, especially in the liberal tradition, which looks at, or which argues in favor of frugality of the individual, reinvestment by capitalists, and thrift on the part of the state, if spending at all. So this is an old idea. It's normative or ideological at base. More recently, then, we see austerity introduced in the 80s in an effort to curb or cure stagflation, but it was continually pursued as a way of actually rolling back the welfare state once those other ills had already been resolved. Again, it was rediscovered in 2010 under the title of expansionary austerity, or the fiscal consolidation thesis. There are major problems with many of these studies and the assumptions that they make inherent to their methodology and whatnot. But aside from academic issues, there's also just the plain evidence that austerity appears to be stunting recovery, producing stagnation, and not helping social well-being whatsoever. So why do policymakers continue to pursue it? At first, this might seem slightly odd, but if we adjust what we think of when we say austerity working or not, perhaps it is working if we consider that it's consistent with particular ideological or normative persuasion to reduce what we can expect from the state, to roll back the generosity of state provision, and provide opportunities for privatization and so on. In that sense, austerity is very successful.
In terms of the question relating to discussions in the World Bank over the role of safety nets and debates between the traditionalists and the human rights advocates, I would say that probably at the moment very little has changed, in the sense that most people in the bank seem to follow the traditional risk-based approach to social safety nets and conditional cash transfers. But nonetheless, there is a, shall we say, a more forward-thinking, innovative and small group within the bank which thinks beyond that particular box, outside of the box. And although this is still very much informal, it could gain greater support in future years, although I think the traditionalists and this risk-based approach still dominate conversations in the bank. And as Bob will no doubt address in his presentation later on, Bob Deacon, there still seems to be some caution within the bank about adopting a more universalistic and rights-based approach to dealing with conditional cash transfers and as a means of addressing poverty. Okay, in terms of the second question regarding the social protection floor, I have to confess that not being in a position to shed much light on this subject, but in a sense, following on from the first question and the domination of the more traditional approach, there does seem to be a certain reluctance in bank circles to adopt this social protection floor concept and to distance itself from the ILO initiatives in this field. No doubt Bob Deacon can give more chapter and verse on this subject, but it does seem to be challenging some of the more stratified and traditional views in the bank about the role of social protection, and many would be very cautious about adopting, I think, the idea of a social protection floor based on the notion that there should be a basic minimum level beyond which all members of society should not fall, in a more universalistic sense. I think many people in the bank see this as potentially opening a whole can of worms which I think a lot would be reluctant to do.
I was asked why China's social policy has expanded rather than contracted in response to the crisis. And let me respond with 3 brief points. First, the crisis was not a financial or a banking crisis for China. China was affected when the impact of the global financial crisis affected its real economy, its jobs, its employment, its exports in particular. And therefore it used social policies to help respond to that crisis. It also, I think, more generally uses social policy to help its own economic development, its structural transformation. So unlike advanced economies with welfare states, China is still a developing country. It's undergoing economic structural transformation, and social policy is a key instrument for that process of change. And I think the third reason why China's social policy, expanding welfare expenditures and programs and coverage have expanded dramatically in this period is a political reason. China has faced extreme inequalities, much increasing amounts of social unrest, a lot of political tensions, and therefore it uses social policies to try and reduce some of the social tensions in society. The second point I was asked was really to think about where China's social policy will go in the future, what its main features would be in the coming decades. On this, I think it's obviously very unwise to to make predictions about China. I think we've learned that over 30 years of very, very rapid and often unexpected change. But what we see from the evidence is that China's social policy system will be based around a core of social insurance. It will have a very broad-based social assistance component to support those people who are unable to contribute or to be part of social insurance schemes through employment, such as many of the rural population, the elderly and migrants. And finally, they are beginning to invest significantly in welfare services, so you have more universal access to basic services. But what will also, I think, become more apparent in years to come is that there will be a strong private component, a strong component that's delivered increasingly by social organizations, non-profit organizations, and NGOs, etc. So I think that's the shape of the system, but what China really faces, where the challenges China faces, are in the politics of creating a sustainable system that can mediate between different interest groups in a context of huge inequalities by region, between rural and urban, by gender. So it faces some major challenges, political, economic and social. And ultimately its welfare system will have to depend on particularly the politics of China's capacity to work out these tensions.
Okay, so the question here is, to what extent is austerity a political project? And here it's clear to us that austerity has been rolled out as a response to the crisis, which has hit states in a number of different ways, but has been created into a kind of a political response to the perceived problem of growing levels of government debt and to state provision more generally. So those on the political right in particular have been able to use the crisis as a justification for making cuts, because they've been able to hold up the examples of a number of countries that have got into huge problems as a result of the crisis. And those problems that those countries are dealing with have been reduced to this problem of debt and affordability of public policies. So in UK in particular, in places like Canada, governments have used countries like Greece to as examples of what happens if state provision continues to increase. What happens if governments don't do something about solving the problems of debt? On the other hand, some countries that have experienced debt, that are heavily indebted, have actually made quite different decisions. Japan, for example, recently has tore up its austerity plan and is going for a period of expansion. And usually, when we look at welfare states, the US is engaged in expansion where the European Union has continued to advocate austerity and contraction. So there's clearly a range of political struggles at the heart of this very debate. The second question is it fair to say that social policy is increasingly being privatized or corporatized, and what are the implications of this? Well, in our work, what we're suggesting here is that the crisis, because it's squeezing public expenditure, and because states are looking for ways of raising revenues, and in some cases like Greece and Portugal are being forced to look for ways of raising revenues. Governments are increasingly privatizing state services. But there's another element to this debate as well, which the crisis highlights, which is a kind of corporatization of the welfare state. And what that means is that governments are increasingly looking for ways of trying to increase the extent to which a whole range of public policies and welfare state provision in particular can be used in order to increase the profitability of corporations, and the extent to which social policy and public policy directly and indirectly services the needs of corporations. So this has been played out in a number of different ways. We've had education expanding in particular ways because of the perceived needs of businesses within the private economy, and we've also seen social security systems transformed. So states using benefit payments and conditionality over benefit payments in order to try to encourage people to take up work. Sometimes that means very low paid and unstable forms of employment. And increasingly states looking for ways in which they might increase the availability of work. That means not only trying to increase the competitiveness of companies within their economy, but also directly subsidizing companies in order to, for example, increase the profits of companies by decreasing labor costs. So what we've seen across Europe and North America and a number of other states is the increasing use of what's often termed active social policy, the increasing use of state provision that is subsidizing wages for employers. And this obviously creates a direct cost for the state. So in the UK at the moment, the bottom 20% of workers in terms of incomes are being subsidized hugely by the state. Around 50% of their total incomes is actually provided by the state. And the big implications then that has is it adds to the costs of states. It adds to the costs of public policy. And of course, the money to pay for that has to be found from somewhere. And part of the problem of this kind of debate is that not only does it lead to transformations in social policy, but it also leads to transformations in issues like the regulation of corporations, but also the taxation of companies.